Okay, I'm hitting it now.
Right, well, a very, very warm good afternoon to you all. Thank you so much for joining this webinar on banking as a service. My name is Tom Graham. I'm a Managing Director in Accenture's banking practice, and it's my pleasure to host this event. I'd like to introduce my absolutely fantastic kind of co-panelists, a real range of leaders across this industry. So I'm going to ask them to introduce themselves, their firm, and a bit about what's new for them. Perhaps I could start with Joanne. So over to you, Joanne.
Thanks very much, Tom, and hi everyone. So I'm Joanne Dewar. I'm CEO of Global Processing Services. GPS is a issuer processor, so we work alongside many core banking platform providers in order to be able to combine to provide the complete end-to-end solution. So with our specialism being the card payments side of things, the integration with the with MasterCard and Visa. So that's what I do in terms of what's new. We've new features and functionality all the time. Super proud of the way our technology team are continuing to deliver against the technology roadmap whilst working from home. Continual onboarding of a wide range of fintechs, digital banks and e-wallet providers, and a geographical expansion.
Superb. And Joanne, you're primarily UK, EU, or sort of all over the world?
So we're primarily EU, but we launched in Asia Pac last year, and we've got a lot going on across the board there, and a few things going on in MENA as well.
And how do you compare and contrast EU versus Asia Pacific at the moment?
Well, in terms of volume of business, or in terms of how things are going? So our volume of business is still predominantly European right now, but we've got, as the different regulators are opening up to the new licenses, to new digital licenses, whether it's APRA in Australia, HKMA, we've got the MAS licenses going through now, Malaysia as well. There are new opportunities springing up, and we're behind many of those.
Okay, very interesting. Thank you. James.
Hi there. Yes, so James Barker. I'm commercial director for Europe for Mambu, and Mambu is a core as a service provider. So a SaaS core as a service. Okay,
nice. And what's new for you guys at the moment, James?
Not seeing anyone else, and not seeing our customers. We miss getting out face to face with everyone. But no, I mean, we continue to see very rapid growth throughout even this very strange time, which has been fantastic to see. Obviously, there's been a lot of change, and business has been adapting. But I've been really encouraged to see that the fintech scene, particularly in Britain, where I spend a lot of my time, has continued to thrive. So both transformations and new entrants coming to the market.
Okay, so net, you're sort of optimistic through all of this?
Yes, I wasn't 8 weeks ago, but actually now I'm very bullish. It's,
okay.
Yeah.
That's really interesting. All right, thanks, James. Perhaps I could turn to Conor.
Hi, my name is Conor McAleavey, and I am Head of Innovation at Leveris. So Leveris is a digital banking and lending platform company. So we can provide the entirety of the technological infrastructure that is required to launch a full services retail bank, I should say, from back to front. It can also be used in a more surgical way in terms of, re-platforming a specific product line or specific, maybe like a mortgage book for lenders or banks that are looking to achieve more efficiency in how they service their loans, or looking to, in addition to that, looking to, create more, have more flexibility in the types of loans that they can create, and also in terms of the innovation and flexibility that they give to the customer in terms of repaying back the loan. We're headquartered in Dublin, where I am today. I'm happy to say it's very sunny. What's new for us? I think a bit like the guy said, 8 weeks ago, we were all wondering how much of a Hollywood movie are we actually in here, But I think as the dust starts to settle a little bit, and we're getting an understanding of what the new world is going to look like, I think we're going to see an acceleration of digitization in banking. I think in the short term, the banks are concerned about and focused on their, as you would expect, the issues that they have right now in terms of how are they going to manage all these payment breaks that are being requested, how are they going to manage social distancing in branch banking and getting back to work and all this kind of stuff. So specifically, they're talking to us right now about how can they get the flexibility into the mortgage books. But I think when we get a little bit more into the autumn, it's going to be about how can we fully, get on, go up about 3 more gears in the digitization journey.
So I suppose taking from that, Conor, then business still good, which is fantastic. But your perspective is actually in taking some of these baby steps now to respond to the crisis, that's a good enabling platform, be it practical learnings or technology fundamentals to go further with products like yourselves.
Yeah, I think that's fair enough. I mean, I think they're quite, narrow in their focus right now. They're just trying to get through the next couple of months. But actually, as they look to re-platform specific business lines just to deal with the enormity of the payment break requests that they're having, that then gives them a technological base to build upon, and they can look at okay, well, how do I expand that now into personal loans? How do I expand that now into debit cards and credit cards and everything else? So I think they almost think they're slowing down. In fact, they're probably actually speeding up.
Got it. And just a last question. So you guys do cards as well in the mix, or just core?
Yeah, no. So it's the entirety of the technological infrastructure. Yeah. So we have an end-to-end data model that goes from everything from the onboarding, the KYC, the AML, the fraud, the risk, lending, cards, current accounts, savings accounts, the GL, all of the the architectural plumbing that goes along with that, and all the and right the way back into the data warehouse at the back.
Got it. I feel unfair. I can see James looking at me as if to say they do all that as well, but I'll say that for later on. Good. All right. Let's turn to Gemma next. Gemma.
Hi, my name's Gemma. I'm from a business called Project Imagine, and we have 2 brands as part of our business. So the first is called Dozens, and that's a consumer offering, which is a spender to saver to investor offering. We're twice licensed by the FCA as an e-money institute and also as an investment firm. And we also have the other part of our business, which is Pi1. And Pi1 provides a digital banking platform with data analytics tools, front end, back end, plus various professional services. And I guess those together are wrapped into our sort of business aims of incentive alignment, looking at how businesses, whether they are banks or fintechs, all those providing tech platforms, can align what they're trying to do with the customer or the underlying customer.
Okay, that makes sense, Gemma. Thank you. And in terms of what's exciting for you guys, what's keeping you stimulated at the moment?
So I guess, in terms of what's new, like we're the new kids on the block. We launched Dozens in 2009, so we spent a lot of time building Dozens in 2019. We spent building in 2018. And after we had built Dozens, which is on the Pi1 platform, we realised that we could launch then Pi1 as the brand in 2019. So we've been speaking to lots of different clients from Canada to Southeast Asia to across Europe, UK, Brazil, Israel since then. So that's taken up a lot of our time and it's been really exciting. But I guess we're also looking at how some of the products that we've launched quite recently under the Dozens platform can really drive customer engagement, and then how the learnings that we have from the Dozens platform, which has now reached 50,000 customers in a year, which we're very pleased with, how we can apply that to our Pi1 customers when they're using our tech for their banking systems.
I think that's really interesting, akin to, Ocado, Oak North, that sort of learning, eating your own dog food, so to speak. Net, the regulatory costs or the overhead of running a bank alongside running the tech stack underneath, you think that nets out in terms of the learnings and the value you get from just kind of living and breathing it, do you?
We think it does. We've learned an awful lot from building Dozens, and it's not every day that you get to build effectively a banking platform, an investment management product. And we learned so much along the way and said, this is crazy that we can't share this learning with other firms. And we particularly enjoy working with firms that are looking to sort of build that coalition in terms of good financial wellness for underlying customers, providing the right types of products for underlying customers. But yeah, there's certainly things that we need to be mindful of in terms of a regulated part of the business and then a separate part of the business. But I think you might come on to that a bit later.
Bravo. All right. Well, look, thank you so much. Can I turn to Nelson?
Hi, I'm Nelson Wootton. I'm the CEO and co-founder of SaaScada. SaaScada is a cloud-based core banking platform, so a system of record for many different financial institutions by type. What's exciting for us, I guess, without sounding too macabre, all of what's happening right now is kind of exciting. It accelerates the digital plan that we believe everyone's going to be on in the next few years. And I think it's creating increasing pressure on existing financial institutions that need to up their digital game. It's become clear to them. Some of them have had absolute disasters. Some of them have responded really well. Some of them have used this opportunity to try new technology and found that it wasn't as scary as they thought it was going to be. And so all of that really plays to kind of a digital provider like ourselves really, really well. So I'm kind of with much of the panel here in that I'm feeling pretty optimistic about the future. Don't get me wrong, it's not without its challenges. I can't remember a time that our pipeline was as wide as it is at the moment. That being said, getting things through the pipeline in the last 8 weeks or so has been tougher than it's ever been. And I'm pretty sure everyone would recognize that in this climate. And that's because financial institutions have had a lot to deal with, especially the kind of existing banks. There's been a lot of demand on them to deal with government initiatives being pushed through, and some of them just didn't have systems in place to be able to cope with that and hurriedly went out to market to try and find something. But all in all, pretty positive about the world we're stepping into now.
I must say, this is turning into a terribly upbeat call. And Tom, I don't want to leave you with an opportunity to be too negative, but perhaps you can introduce yourself and give us your perspective as well.
So that's me, it's Tam. So Tam,
sorry, Tam.
Hi everybody, that's okay. It's an unusual name. So I'm Tam Holmes, Chief Client Officer of 10X. We provide a cloud-native core banking platform that offers services for retail and business banking. And fundamentally, the aim of the platform is to help banks organise their data better so they can make better decisions for customers in real time at lower cost. And what that allows us to do is partner with banks who either want to transform their existing businesses, in the case of a backward migration, or want to build a transformational new business. We were founded in 2016. We've been growing very rapidly since then. And I think we have a very unique mix of banking and technology experience in the team that we bring to bear. And that's allowed us to, work with some really amazing clients, including large global tier ones. So we're able to offer a solution for all parts of the banking market, including and up to tier one. And what's new for us at the moment? Now clearly, massive change in the world and in the market in relation to COVID, but we're particularly excited about some work we're doing in Australia with a client down there building a banking as a service platform with them that will allow them to offer exciting services to their partners, and that's due to go into production at the end of this year. So a lot on, exciting times.
Fantastic. All right, well, look, let's cut to the chase. So we're here to talk about banking as a service, and I suppose what does that mean, right? What does that mean? So perhaps, James, I could take your point of view. So what does banking as a service mean for your company?
Well, for me, it's most often a technical term. So we're talking about the entire end-to-end technology stack. I suppose you could extend it also to include the license. So you wrap everything up and you provide a bank as a service, as a white label, technology and license. But for me, it's predominantly about the technology. I think if we step a little bit back from the technology, to me, there are really like 4 essential technology approaches. So I think earlier on you thought I was sort of looking and nodding at you saying we do all of those things. Actually, the truth is quite the contrary. So, Mambu doesn't provide an end-to-end technology stack. What we provide is the core. So when we talk about the core specifically, what we mean is the system of record, and we mean the product definitions, the product factory. So to us, there are kind of 4 technology approaches that someone launching a bank or building a technology stack can take. You can adopt the build it yourself approach, which is not exclusively, but I suppose a good example of that is the guys at Monzo. Hat tip to them. You get a huge amount of control over your technology stack, but the overheads are massive. You've got the more traditional monoliths, so guys that sort of wrap everything up and deliver it on a plate, but it's, you know, usually comes with a very, very rigid approach. I suppose a variation of that is you get the sort of the mega vendors, you know, the FIS and, you know, perhaps the, you know, Temenos and so forth, where they can provide a huge amount of stuff, but, you know, it's a lot of different stuff, different ages within the technology stack. It's often very tightly coupled and tightly integrated. It doesn't open up and it doesn't integrate necessarily very well. And you've got the final approach, which is where Mambu sees ourselves, which is what we call a composable architecture, where you're essentially taking, you know, open by design, API first, predominantly SaaS-based components, and putting them together in this composite architecture. So Mambu sits under that paradigm. And for us, the most important thing is that, you know, a few years ago, banks used to be built to last, and now they need to be built to change. And you really need to engineer agility into the fundaments of your business, so that, you know, if the market changes and your customer base changes with it, or you want to go into new markets, that you can adapt very, very quickly. Otherwise, you've essentially painted yourself into a corner. So with a modular architecture, you can essentially add new components or remove components very quickly and adjust what your business and what your technology stack looks like. So yeah, we deliver that in a SaaS model, or I called it core as a service earlier, but we sit underneath this bigger paradigm of composable banking, and that's really the important thing for us. It's not this, we're not focused on what we do. It's the bigger picture of this composability that we think is going to be the future of banking technology.
Okay, that makes sense, James. So we talk about a deconstruction. I love the way you put it around built for change and agility. I suppose, Conor, turning to yourself, yeah, any builds on top of that, and to your point, I suppose, James, around API first, flexibility, plug-in, etc. Yeah, what's a reasonable time frame to expect a customer to plug into your service and get going and be productive?
Well, it just depends on what the proposition is and whether it's greenfield or not. You know, if it's a greenfield bank where we have control over what the service is in terms of, you know, the lack or magnitude of integrations. You know, you're looking at around, you know, less than six months in some cases, maybe 3. Okay. Some banks then, of course, will force upon you lots of integrations for whatever reason, right? But I guess the Leveris thesis is that you don't need to have all these integrations if you're using the Leveris platform, because those integrations come pre-integrated, okay, in a kind of a best-in-class scenario, all right? And how does that fit into a kind of a BaaS scenario? Well, you know, like James said, there's no real perfect definition of it. You know, some people consider it a slice of financial services capability that you're offering to a client, right? Or maybe, like, let's say you're providing access to payment rails and the associated technology that underpins that, right? And that's a very good business model. It's very successful, and it's very useful. I guess we take a rather broader approach to this, and James, you know, I refer to it as that. What we're kind of saying is what I described initially was sort of almost like a banking service as a service. We're saying it's banking as a service. So it's the entirety of it, right? It's the regulatory framework as a service. It's the technological imprint as a service. And it's the operational infrastructure as a service. So that you have all 3 layers, right? And that the customer then at the top, who's your client of the banking as a service, only has to concern himself with, or she, with what is the actual product I want to bring to market? How do I configure that product? And then how do I brand it and communicate and advertise it and market it, right? So you're taking away all the regulatory burden, all the tech burden, all the operational burden, right? And that means that it opens up the world of financial services to a whole host of businesses, like, you know, customer sort of, you know, brands that have big customer bases that want to get into financial services, but don't want to have the bother of all those 3 stacks that I talked about, right? And it's going to get, you know, we feel it's going to become a bigger and bigger thing, because when you look at what's happening with the big, you know, as platforms continue to eat the world, what they're concerned about is, how do I keep customers within my ecosystem, right? And part of that is trying to blur the lines between a transaction within my ecosystem and the actual financial thing that's happening in the background, where money is moving between accounts, right? So I think we're going to see more and more of that. And I think banking as a service will become more broader, but of course there will be more narrower players that are playing a very crucial role as well.
That makes complete sense, Conor. Without me putting words in your mouth then, am I reading you right in saying that in the sort of longer term direction of travel is that the people you traditionally view as the banks today kind of increasingly get out of tech? Is that your sort of long-term hypothesis here, even if it takes, let's say, a decade or two to do?
Well, you could see an emergence where there are, large banking and as a service players who have no B2C customers per se, right? Where the bank is built specifically to offer services to other organizations, right? So they become almost like channel partners, right? Where you could have a bank set up specifically for a BaaS purpose, who has 1 million customers that come through a channel associated with a supermarket, and 1 million customers that come through a channel associated with an airline, and 1 million customers that come through a channel associated with a tech company, right? So I think that could very well happen. Will banks move away from technology? I mean, the banks are already on the technology. I would say no, but you will see a lot more entrants coming into the market, right? That don't want to and don't necessarily have to anymore worry about the things that I spoke about in terms of that whole regulatory infrastructure, business operations infrastructure, and technology infrastructure. They'll want it as a pure service. Okay, very clear. Thanks, Conor. Gemma, perhaps I could turn to you. So again, in this concept of defining it, when you go talk to banks and clients, prospective clients around it, evidently you get into sort of what do they want. I'd be really interested in what they ask of you guys, but also the business case you make back to them. So why is banking as a service economically a good idea for them as well?
And actually, I'm going to link this back to something Conor mentioned as well in terms of engagement. So I guess for us, the banking as a service at its core is, front end in terms of app design, back end in terms of orchestration, looking at data analytics, and then maybe professional services on top as well. So often our clients are interested in maybe our brand consultancy services or legal and compliance consultancy services as well. But I guess for us, one of the real differentiators is that we're also running a banking platform ourselves. We're running dozens ourselves each day. So we have learnt a lot from doing that, but we're also able to run maybe our own sort of experiments on dozens too. We're a nimble business. We've built very quickly. The same team that is that's built and run dozens is now running Pi 1. And we're able in those experiments, while we wouldn't sort of mess with, safeguarding and security, we might, for instance, introduce difference in pricing or difference in customer flow or difference in app screens quite quickly. And we can do that really, really quickly on dozens. So our customers are really interested in that kind of additional service that we can provide. And then I guess our other differentiation that we look at is financial product innovation and how that can be teamed with tech to drive customer engagement. So we find on our dozens consumer offering, average balances are £400 to £500, which is quite a lot higher than a lot of our competitors. And we know that dozens is relatively late to the market in terms of FinTech businesses, but actually we've been able to learn and look at how we can use financial product innovation to then drive customer engagement. That means that the learnings that we then pass on to Pi 1 are actually not late to the market, and we're actually in good time for that.
Got it. Okay, Gemma. So to very roughly précis, do more whizzy stuff, do it quicker, and you would hope net of everything else, the kind of infrastructure, the run cost is less as a result. Those are sort of three themes.
That's definitely right. I think we've got we've got a really experienced team as well that's worked in a number of different banks and asset managers, and you have to bring in experience to that too, right? So as much as you want to be lean and efficient with new technology, you have to add in experience to be able to look at cost saving and doing things efficiently.
Got it. Joanne, perhaps I could turn for your timely. So I suppose the question to yourself, Joanne, then perhaps your point. You guys have got to sort of focus on cards and plastics. I'd love to know a little bit more specifically around what that means in that context, but please go ahead with your other point.
Well, it's all related actually. It's, fundamentally the core for me is about the provision of the technology stack such that we've taken that worry away from the customer, so that the bank or the FinTech service provider can focus on their customer and providing UX, focusing on pricing, the value-added services. our customers and the banks, they don't want to spend time worrying about the need to upgrade the chargeback functionality or 3D Secure 2.0 or the latest cyber patching or whatever's required. They're all considered effectively hygiene factors. They're happening behind the scenes. And so, like what we're doing with Dozens, like we're partnered with many organizations, we're taking that worry away from them. And what's clear is that pace of change of technology upgrades, whether it's from a regulatory upgrade standpoint, whether it's from a security standpoint, that pace of change is only accelerating, which is meaning is more and more investment required. And the more that, organizations are able to partner to take some of that worry away so that they can focus on their end customers, the better.
I totally agree with all of that, Joanne. I suppose, to my mind, cards as a banking as a service, be it through First Data, Fiserv, TCS, and many others in that sort of space, we're kind of leading this charge of taking that worry of run away, so customers could focus on business. Do you think that's because that was quite a convenient kind of product line that was kind of consumable for organizations to take? Is there a lesson learned in that for how we think about other bits of the business and try and move more products onto a banking as a service type offering? I'd really love your thoughts.
I think in some respects, yes, it was sort of more easily severable than the rest, the core part of the core banking platform, which is probably why the clue's in the name of that piece. But, some organizations, including tier ones like RBS, they were using third parties right the way through anyway. So you're right that there has been more of a history of using externals for that element. Maybe it's considered that the core banking is more sort of the heart and soul of a bank, but
maybe it's
it's certainly sort of been proven for a long time on the card side of things that using outsourced providers is a more than credible way forward.
Great, Joan, thank you so much. Tam, perhaps I could turn to you and 10x in terms of how you think about banking as a service in your client discussions.
Yeah, I guess if we start with the definition, I think if a bank is B2C, when it becomes banking as a service, for us, I think we're thinking about other institutions offering products but taking advantage of a bank's balance sheet or distribution channel or risk controls. So it becomes a B2B2C model. And then what we do is provide the platform for that. So it's a B2B to B2C, so we're thinking about the definition. But then I think to bring it to life, so I guess there's this piece around institutions able to offer, or companies able to offer products, financial products to customers that they haven't been able to do so, and then a new distribution channel, which then allows them to use their brand, but with a whole new set of products and revenue streams. I think then, if you look at it from a bank's perspective, if in the next 5 years, I think McKinsey are predicting that bank revenues are going to drop about 45% in Europe, right? So for a bank, you've got this cost income challenge. So I think banking as a service for banks, they've really got to look at it as a new and interesting and potentially long-term strategic revenue stream. And then when I look at it from our perspective, it's, well, what services can we offer to a bank to enable them to enable those additional revenue streams? And if I think about the sort of client groups that are interested in this type of thing from our perspective, I think it's, a set of banks who are fundamentally taking a sort of revenue view on this. So how can I bring these new revenue streams to market and begin to improve our P&L? And then I think there's also a set of banks who are thinking, I'll run some banking as a service activities, but actually I'm doing this as a operating and technology hedge for my back book. So prove some services in a new stack, and then think about them migrating the back book onto that new stack. And that's the sort of clients that we're talking to. And so they're either doing one of those flavors or actually both. So we see this as a growth part of the market. I don't, from our perspective, and in banking generally, I don't see this becoming dominant in the next 5 years. But I do see the proportion of banks entering into this sort of arrangement becoming much higher.
And that's really interesting. So a few follow-ups to that. Do you think the overriding factor in all of this stuff is new products? And if so, I'd love a few sort of ideas or things that people are talking to 10x, if you can divulge. Or is it the cost play? It's just fundamentally cheaper and easier. I accept it's a bit of both, but what do you think is the overriding factor?
It's genuinely a bit of both. So if I give you an example, so it would be, an airline loyalty scheme. and typically you can only spend those loyalty points on flights or, a curated set of products that you probably don't want, so you go through the catalogue and you pick something that you're just going to take because you have to spend the money.
I can see some cuddly toys for British Airways over your left shoulder. Yeah.
Exactly. So if instead you can offer, say, a MasterCard or Visa payment card to be able to go and spend that money on whatever you want, then that's actually quite a different proposition, I think, for a consumer who then may take more interest in the loyalty scheme that that airline is offering. So, but then when you look at the costs, absolutely. So I think, coming back to this point around banks' cost income challenges, banks are going to have to transform to enable themselves to enable the change in the fundamental economics of banking that's required in the next 5 years. So absolutely, I think there's a cohort of clients that we speak to are really thinking on the cost side.
Okay, then just before I come to Nelson, I'll answer some questions in a second. So whether it's Tam, yourself, or anyone else wants to give a point of view, in any of the sort of client discussions or the business case development, do any of you sort of settle on a figure that says, look, if you moved your products to a banking as a service model, it's 10, 20, 30% cheaper? What sort of numbers are we talking about here?
I would say from a TCO perspective, you're going to have to be taking 50% of the cost out. Now, it's difficult to measure, obviously, inside an operating model, but I think if you're looking at technology cost, you have to be starting at taking a dramatic amount of cost out. But it's not just the technology, because I think implementing these platforms allows the bank to implement a new, flatter and smaller operating model. So I think those two things have to go hand in hand in order to enable that cost takeout.
It's helpful, Tam. Any other views? James, sorry.
Yeah, so I think Tam's alluded to this. There are lots of different kinds of costs. So the cost comes at different stages. You've got just keeping the lights on cost. But actually, to me, what we've seen, a huge amount of the cost, like an iceberg, is under the surface. It's not running your products. It's not even a lot of the time launching them. It's when you want to change. It's something, just a small change. And, if you've got sorry, to use an example, if you're running a technology stack that's 30 years old and written in COBOL or something, it can cost you £500,000 to move an icon and 6 months to move an icon from one screen to the other. So it's one of the key areas of cost is the cost of change. So you want to minimize the cost associated with making changes, whether they're sort of large or small, launching a new product, changing an existing one, and that's really where so many of the existing sort of the large banks carry so much cost that they don't move. They don't even attempt agility because the cost associated with it is just prohibitive.
Makes sense, James. So I'll turn to Nelson in a second, but I suppose just to kind of summarize those two bits, Tam. So cheaper to run, James, cheaper to change, but Tam, something else you said there, which I think is key to how I know many banks think about this, is you just fundamentally need less ops people to do stuff that bridged broken tech processes. And things are just inherently more straight through or more self-serve. So I think you made that point, but that feels like another big bit.
Yeah, absolutely. And I think it's, you genuinely have to do something transformational to get those transformational outcomes. So renovating the house while you're living in it is a really challenging approach to do that. So, I think banks are looking for a different approach. And I think actually the global circumstances of COVID are just accelerating those trends, actually.
Bravo. All right. So Nelson, close us out. How do you guys think about banking as a service?
Yeah, there's not a lot left to go over, but I finally thought of something whilst this was going on. So one of the aspects that we kind of really think about, there is two different sides to banking, and banking's like a really broad term. So I'm going to use two terms and define them now as I talk about this so it's clear for everyone. So origination is one aspect of it. And origination is the process a financial institution goes through to bring a new customer on board with a new product. So it might include risk factors if you're lending to them. It might be relevant KYC, know your customer processes that are regulatory if you're going to allow to hold their money. And the other aspect to banking, if you split it in half, is servicing. Now, servicing is the looking after those accounts once they exist. So servicing a mortgage means making sure that you issue a statement once a year and checking that the payments come. But actually, originating a mortgage means figuring out whether the house really exists and it's worth this much money and Nelson can afford to pay the mortgage and so on and so forth. And I think the servicing aspect of banking really lends itself to banking as a service. It's coincidence that it's in the name, but actually servicing is a very well-known, well-documented, well-understood process that a bank goes through again and again and again and again. Origination is really different. A bank's USP often is how it originates, how it grades and measures risks. And I don't think you can just stick that out to a third party and hope that it's all going to work okay. You have to have ownership of that as an organization if it's your USP. The servicing aspect, absolutely. Outsource it. You're wasting an awful lot of time and effort running technical teams, trying to provide changes that the regulator asks, all the kind of points that James and Tam have both raised, that you waste loads of time trying to be agile to respond to what's going on in the market. Waste of time. You should be focusing on your USP. If your USP is, I understand lending properties here or unsecured loans there better than anyone else, spend all your time and effort on that. Don't worry about servicing that. You can push out to somebody else.
I think that's a really interesting take, Nelson, and perhaps a clue as to some of the specializations that would get more important in a couple of years' time within the bank. Look, really rich debate. I'm conscious if we kind of step too far past some of these questions in the chat window, they might lose their relevance. So if I pose them and then if anyone wants to put a hand up to answer. So a question from Dan Fiheni, forgive the pronunciation there. Where do the open banking TPPs fit in to the various banking as a service infrastructures? Would anyone like to take that one?
Yeah, I'll make a start if you want. I think essentially I see them as plugging into those infrastructures. If I think about bank as a service, really offering those true banking products and then TPPs sort of operating through those products, then I see, the open banking plugging into that infrastructure. And indeed, that is actually happening. So, that's the way I sort of think about it. And I think, again, in the same way that, if banking as a service allows a different business to offer banking products, open bank is, I guess a flavour of that, if you want to think of it in that way. I think as it matures, particularly in the UK, we'll see new products coming to market and taking advantage of it.
Okay, thanks, Tam. Hopefully that answers your question, Dan. To others on the call, please do feel free to ask questions. Nelson, maybe this comes back to your questions. Answer. Question from Paul Loberman. In the composable architecture model, how do you best manage the front-end user experience delivery, brackets in-house, another partner, bank does their own or something else, as this is part of the end customer, what the customer sees and uses, and vital to get it right for customer product growth. And then that sort of comes back to some of your thesis here around excel at some of that front-end stuff in-house. Was my take on your answer?
Yeah, 100%. So, and again, it varies from brand to brand about how important that stuff is. But generally speaking, if I'm dealing with an exciting new challenger that's got a bright coloured debit card of some description or other, the whole user experience that they're going to drive is something they want to own, and their business is going to work really well if they own it. And from our point of view, absolutely fine with that. Here's a whole set of APIs that allow you to drive that customer experience. We actually want you to own that. Our best customers are the ones that own it. We'll happily provide it. But you have to have a very different business model if we're providing it, because your unique thing isn't a white labeled banking set of screens. You've got some other USP that drives your business, and understanding that early is critical.
Okay, any other takes on that one? Superb. I can see Dan's enjoying your answers. He's asked another question. Look, I'll go to another flavour here. So it's another great question. So hands up, who's worked on a mainframe system?
Obviously.
Joanne, you get to enjoy this, and you'll get my tenuous link actually, which is relevant perhaps for your business. So I quite like this sort of base assumption that mainframes are fairly resilient, and that on the whole they don't go pop, and they're pretty good at chugging on and on and on and on. They're quite notable, I'll call it a banking as a service player failure today, who had provided prepaid card services for many fintechs in the UK. And I'm kind of interested by your take on how organisations assure resilience and that the services they're procuring and using stay resilient and reliable. So I suppose, simple question, do you think it's the end of the mainframes? And how do we prove that the banking as a service infrastructure stays reliable and resilient?
There's different aspects to that, I guess. I think is at the end of the mainframes, they're interesting in some respects, without sort of technologically calling them mainframes. You do still see the need and the desire from certain banks and organisations. You know, they like the idea of having an externally hosted infrastructure. They love the idea of the cloud, but then they turn around and say, well, actually, can we have that inside our data center? And it kind of ends up going full circle. So there isn't a universal approval of cloud in the way that you know, is sometimes sort of represented. You know, certainly there are sort of the old school white collar organizations that do like having stuff physically within their space. But yeah, otherwise, you know, it comes down to the regulatory licenses and protections that you know, obviously regulators like the FCA provide to secure cardholder funds.
Okay, I mean, Gemma, what's your take on how you assure resilience for clients?
So I guess, I mean, certainly with Dozens, we have to ensure resilience through the two licenses that we have, in looking at, you know, outsourcing, critical outsourcing. I guess for Pi one of the, you know, we look at testing a lot. We also look at contingency a lot. And obviously for Pi one, while we are looking at the core infrastructure, there are obviously various different partners that also feed into that too. So whether we feed directly into one of the card schemes, or if, for instance, we can't build a KYC passport scanner that's as good as there's another tool that's already out there. So I think keeping an eye on the tools that are there, continually reviewing them. We can also use them as part of our Dozens platform, but making sure that there's an array that's available to our Pi one customers means that the Pi one customers are able to have a full range of what's out there, but also maybe spread risk as well, in terms of not relying completely on one system.
Got it. I mean, any other answers? I think this is such an important theme, really. I mean, what do you say to clients when they talk to you about their need for resilience and reliability?
Yeah, if I get the sort of 10x view, so I think it's, you know, I think security, resilience are the two most important things really for the sorts of platforms we offer. So it's, you know, front of mind for all of our clients. I think, you know, to the question, yes, I see sort of mainframes declining, but actually, you know, if you look at a bank's technology estate, actually there's a whole bunch of kit that isn't mainframe, and that is absolutely migrating to the cloud, you know, and they're mostly gone, in my view, you know, in the next 5 to 10 years. You know, I think there'll be some banks who still want to have their data residing on their mainframe back at base, but that, you know, the number that 5 years ago would say that it's always got to be that way, that's reducing literally week by week. And I think you've only got to look at COVID to see what happens if you're forced to do something. You know, I've spoken to colleagues, ex-colleagues from banks who, you know, their entire staff have been given remote working technology that was not available to them before this crisis. You know, so when things have to happen, they can happen. And then when you think about, you know, is the cloud more or less resilient than a mainframe? It's, you know, I guess it's evens, right? I think it depends what technology patterns you implement in order to offer that resilience. You know, we spend most of our time thinking carefully about deploying our technology across, you know, multiple redundant sites such that it offers mainframe levels of availability and performance. But, you know, that's where the hard work lies, really.
And can I just do a show of hands? Are you all cloud agnostic? Do you all, are you neutral on the cloud provider?
Yeah. Completely agnostic.
Anyone tied?
No, not so much. But I mean, as a SaaS product, it's actually not so important which cloud Mambu goes into. I suppose just to extend the resilience thing, our primary partner has historically been AWS. You know, hat tip to them, they've been absolutely fantastic. I mean, when we launched Oak North as the first bank in the cloud back in 2016, we literally wrote the book with their help. But one of the things that the regulator has been looking at is less dependency on any one single element within the stack. So that's taking the resilience thing really to the nth degree. So now what Mamba's working in is having multi-cloud provider resilience. So, you know, it's not just like a multi-region setup with a failover in another region. There's other failover components that go to other cloud providers. So, you know, you're really creating a degree of resilience that, you know, short of the Earth being hit by an asteroid, you know, your bank really shouldn't be going down.
You know, 2020,
it is 2020. Anything could happen.
stick something on the moon, then I'd be reassured.
I think it depends what you mean by resilience. You know, like I think the way the question is asked, it's a more of a historical context in terms of, you know, cloud versus mainframe kind of thing. And as Tam says, you know, he said it was a draw or whatever phrase he used. You know, I know people that'll say the cloud is more resilient. I know people that'll say the mainframe is more resilient, right? But certainly there is a huge amount of resilience and redundancy in things like AWS, right? But then when you think about resilience from a more broader sense in terms of the entire organization, I think resilience comes out of flexibility, right? So I think historically banks try to invest in predicting the future and then building something for that eventuality, which really is a crazy thing to do because you can't predict the future, right? And I think COVID is showing that, right? You have these black swan events happening all the time. So I think what banks need to do if they're thinking about, you know, resilience, they have to invest in preparedness. And the only way you can invest in preparedness is by investing in flexibility, so that no matter what that eventuality of those bazillions of eventualities that may happen, you're nimble enough that you can evolve with it and not only, you know, get through the crisis, right, whatever it is, but you can actually be stronger as a result of that. So you can see that with COVID now, but that could have been anything, you know, and it could be anything in the future. So I think it's just a definition of what you mean by resilience. I tend to think about it in a more broader sense than just about, you know, mainframe versus cloud.
No, I buy that, Conor. Gemma, you're off mute. Did you want to add something or? No, fine. So just whilst we're on this theme of kind of cloud providers, a really great question from Leon, and kind of briefly, beyond their existing product offerings, do any of you have an anxiety that you won't be competing with each other on this call, but be competing with Google, Amazon, etc., and that they'll get into this business?
I've been in discussions, I'm not going to mention which one, but I've been in discussions with one of those major cloud providers in association with a financial institution to provide banking as a service, whereby we're looking at our technology running on their cloud with the bank providing the kind of regulatory and servicing aspect. Do I think that the tech players might move into finance? I think in the servicing aspect of that, yeah, definitely. But as to the previous point on origination, absolutely no. I don't think they've got a clue how to work out whether Nelson's going to make his next mortgage payment or not at this moment in time. More data would have to be gathered before they feel comfortable about doing that. But the tech players are sticking their toes in the water. You know, Apple have done, and I'm sure, you know, Amazon have done, but not as much as they could do. Do I think they will? Yes. Does that worry me? No. I think it would worry me if I was a bank. We've got the view in our business that we're going to see a lot more lifestyle banking providers, so a fragmentation of the big players, and the tech companies are going to provide a very commoditized generic product, and it will work for lots of people, but there'll also be lots of reasons why. In fact, most of the people on listening to this and actually participating will have more than one current account. You know, that's a reality. So there's a sort of different service offering around banking, day-to-day transactional banking. But could the tech players come in and play? Yeah. If I was a big bank, I'd be worried.
That makes sense. James, you were going to say something?
Yeah, I was going to say I absolutely think that there's a risk that they might do that. I mean, if you look, obviously, Google Pay and Apple have their own plastic now. Amazon have been issuing loans to some of their vendors, so they clearly have some of the capabilities. I would say that the degree to which they choose to is somewhat in the hands of traditional banking providers and the neobanks, because one thing that these guys do is they're large scale disruptors. You know, if they see something that's fundamentally broken, they will take it as an open invite to come in and fix it. So I think, you know, if a lot of the neo entrants continue to disrupt, it'll be less appealing for them. But if no one achieves this and the big legacy financial institutions don't change, they'll step in and they'll fill that void with their own disruption. So I think you know, we'll see, and it's very much in the hands of the existing neos and the existing banks. Okay,
forgive me, Gemma. Yeah,
I'd also say there's a level of scrutiny that you know, the large tech firms would have to step up to, or you know, step further into, the more they step into providing financial banking as a service services. And I feel like while the large players are probably having more scrutiny now than they ever have done, I don't know how they would find, you know, having to have sort of regulatory style audits as key outsourcing partners, whether that would be palatable to them. And I completely agree with Nelson. I think that it would be quite difficult for some of the really large tech players to provide really bespoke services. And yes, they may be able to provide a piece of software that's great if that fits your needs. But if you're a client that's got a slightly more bespoke, or you're looking for, you know, increased kind of product market fit, something that is more akin to, you know, what you think your customer base is, and that doesn't completely sort of plug into, you know, a Google type offering, then the large tech providers won't be the ones for you.
Perfect. Yeah, forgive me, Joanne.
To provide a slightly different view on that, I mean, I think the large tech providers provide a very credible threat, because the one thing that they are phenomenally good at is data analytics. And so they have the capability of, you know, really analysing and understanding the consumer in a way that banks historically, whilst they sat on all the data, they've never really figured out how to maximise their value out of it. And, you know, whilst they, as Nelson says, you know, they may not know Nelson as an individual in a way that a bank manager may, in order to be able to decide on a mortgage or something. Actually, we as consumers are really annoyingly predictable in our behaviours. And, you know, whether it's, you know, what time we go to work, where we go and buy our lunch, you know, what our day-to-day, month-to-month habits are, we are extraordinarily predictable. And if, you know, whoever really enables their ability to be able to harness the power of that analytics, I think it's going to be the winner.
Bravo, very, very fair take, John. So look, we've got 8 minutes left, and there's 2 quick themes I want to cover off and then answer a few of the questions. So let's just talk regulatory for a second. I'd be really interested with any of the panelists' take on what are the regulators saying about all of you, and do they have a point of view beyond what we've already discussed? So anyone sort of strong urge on this?
I'm happy to.
Yeah, go ahead, Gemma.
Sure. So as I've said, we're a twice regulated business. So the regulators probably got quite a lot to say about us in a number of different ways. We, as Dozens, aimed to push the boundaries in a number of different ways. And even as a small business, we knew that by pushing boundaries, we would have discussions with regulators when we want to launch certain products, or the way that we want to, for example, have the license structure that we do. No other firm in Britain is licensed in the way that we are. And even as a small business, I think you know, that's probably led to more discussion than even we anticipated. But from a Pi 1 point of view, we found that really helpful. It means that we know really clearly what a regulator has been looking at within ourselves as a new business, and we've been able to have really constructive discussions with regulators that have ultimately made our Dozens business stronger, and we can completely apply that to clients of ours that then come to Pi 1. I think that you know, regulators will continue to look for resilience in terms of banking as a service provider, and I wonder whether ultimately banking as a service providers will be regulated, and that doesn't worry us because we already are twice.
Got it. Twice as hard. Tam, very briefly.
Yeah, I think from our perspective, you know, our clients are the ones who are regulated entities, so we're sort of at a remove. But basically, you know, so our clients are having discussions with regulators about, you know, our security resilience and sustainability to a point where the regulators persuaded with the, we're the right choice for them. So we help our clients through those discussions, and I think our sort of knowledge from a lot of us from doing it from the bank side as well sort of helps us to engage in that. And data sovereignty is also a big thing. So depending which territory you're in, often the data needs to be in that territory as well. Got it.
Okay. Look, I'm going to go to a question asked by Anonymous, probably not their first name. And it touches on a few themes, Tam, Conor, James, you've alluded to. So I suppose it's clearly easier to get going with a banking as a service proposition afresh, your greenfield setup. So there's a question here around, do we think it's kind of easier for tier 2s and tier 3s to kind of take your tech because they're typically already doing that, albeit with another provider? And then I suppose a supplemental from me, you referenced, I think, Conor, Tam, a number of big banks sort of dipping their toes in the water. We talk about this speedboat strategy. Do you think that's a good answer? Do you think that's a good test? Or have we kind of fundamentally proved that this works? And we really just need to solve for the confidence and the business case to get there. So, Conor, I don't know if you want to go first on that.
Yeah, I mean, the speedboat thing, just to start off with that, I mean, I absolutely support that as a strategy, but I mean, it's not the what that's most important, it's the why and the how. Okay, so I think you got to start with the why, and the why is, what am I doing this thing for? What is the end goal of this lifeboat? And if it's a case of, I'm just going to test some technology, I'm just going to test some customer propositions, I think we've already proven that. We already know that cloud works and modern architecture is a much better thing, and from the customer, right? And I think it's, so you have to set out and go like, this is going to eat my lunch eventually. I'm building up this new bank to eventually start taking customers off the old bank, and I've got a 10-year strategy to actually move over to this new bank. And then I think you got to think about how am I going to do it, and you have to avoid all the pitfalls of the classical innovator's dilemma in terms of resource dependence, and where some of the key people are seconded to this project within the walls of the bank for a period of time, but then they're pulled away again when something happens. That's not going to work. It has to be funded properly, it has to be resourced properly, and it has to, I think, exist outside of the four walls of the bank. And while I wasn't involved in kind of Bo, I suspect, despite all the good intentions and all the people that were involved in it, that were very, very smart people, I suspect it was those classic problems that come with trying to, create an innovation within a larger mothership was probably the shortfall of it, and not the tech and not the intention.
Yeah, makes sense. James, very briefly, and then perhaps someone else will move on to another question.
Yeah, so I think I probably share Conor's opinion. The speedboats, I think, are fantastic, and I think there's a lot of poor understanding of what they do and what they represent. It's not just about launching a new brand and a new product. A lot of the technological concepts that we're talking about, running mission critical applications in the cloud, building ecosystems and managing those ecosystems. Those are relatively new concepts, and what the speedboats are is they're a fantastic way to learn and incubate understanding before rolling out at scale. So we're absolutely seeing larger scale ecosystem driven projects within the banks. Obviously, it's not just down to the technology. The banks need to come along for the ride. So there's a big journey for them, and it's also the services partners that need to come along with them as well. I mean, if you look at the transformation project of yesteryear, you potentially look at what's happening at Bank of Ireland. I think they were headed for a £2 billion bill, big bank transformation in one hit. And I just don't think there's an appetite. So what we're doing is we're testing and learning ways of working and new technology operating models that can deliver value on a far shorter timescale and incrementally. And I think these speedboats are, they have a lot to do with that. This is in a lot of ways the first steps into something far, far bigger.
Bravo. So look, we've got about a minute to go, so I'm going to do something a little cheeky. If I could all ask you to hold your hands up, thumbs down, thumbs up and down. Dan has asked 3 smashing questions, but I think his third one we can do with a thumbs up, thumbs down. Beyond the obvious, does Brexit make any difference to your businesses? So makes a difference, doesn't make a difference? makes no difference. Sort of makes a difference. Uncertainty, okay. And then last but by no means least, I think two people have asked this, so it's worth sort of touching on. You sort of have to believe a hypothesis that if things are easier to build and they're more flexible, you might be able to build products that are more financially inclusive. And I think that's a reason for optimism. Do any of you want to just talk to any customers using your platforms in that way? Or have you seen any particularly strong examples moving the industry forwards in this regard?
Yeah.
So, go ahead, Gemma. No, go for it.
So from our perspective, yeah, we've got a number of programs that support financially inclusive products, actually with a prepaid card as the base, and providing agency banking capabilities on top. And that makes the ability to do fast payments and out direct debits without actually having a full debit card. So there's a wide range of customers that we have supporting those, from B2B, one pay, card one banking. There's a very large range, yeah.
So you fundamentally believe, Joanne, you make it easier for people providing services to different segments to get going. It makes complete sense. And
Yeah.
Nelson, just closing comment.
Yeah, it's kind of at the heart of why SaaScada was created. My co-founder Steve Round was the chairman of The Big Issue, and this journey started when he said, "How do I get bank accounts to people who are excluded?" And that journey took us into core banking because we had to lower the cost of running those accounts, and we had to go all the way back to the beginning to do that. So yeah, very much at the heart of what we do, and people definitely are using our platform to achieve that.
Well, look, that is fascinating. I think you all deserve a round of applause. The only brief introduction, I think, was Tam, but we'll let him off. It is a gloriously warm day. Thank you all for sort of being present and with us. I've thoroughly enjoyed the debate. So can I wish you well? Can I thank our kind of host Innovate Finance for looking after us? But otherwise, it was lovely to see you all, and take care of yourselves. Cheers.
Thanks, Tom. Cheers.
Bye.